Welcome to the AJ Brown Show, where we talk about all things investing, options trading, and the like. Now here's your host, AJ, whose primary mission in life is to help you become a better investor.
Right, ladies and gentlemen, welcome back to episode 198 of the AJ Brown Show. Mr. Cool Guy AJ Brown in the house. My name is Cyprian Francis. Today is August 22nd. AJ, I feel like it's been a calm week until like the last 45 minutes when we're seeing this pretty big jump up from the Jackson Hole speech. What are you looking at? What's your takeaway? It looks like we're getting a rate cut.
Yeah, well, I mean, he was very vague about it. And this is a case where investors are grabbing on to what I think they want to hear. So he was very vague about it. I listened to a good portion of it, and I heard what they heard. He said like one sentence that was like, "We might have to look at easing monetary policy coming up." And they jumped on that and prices soared. So, yeah, that's what they were waiting to hear. It doesn't necessarily mean that a rate cut is coming, but, investor sentiment, it's not necessarily what happens, it's what investors, how they interpret what happens. So, yeah, the two things I took away is, hey, we might be easing things. We still have to be reactionary. That was number one. Number two is the Fed has to remain independent. So that was kind of a stab at this whole thing about I'm going to fire Fed presidents. I'm going to influence the Fed. I'm going to get rid of the Fed and all this good stuff. Basically, he reinforced that the monetary policy has to be done by an independent group.
Yeah, and when I pull up the chart, I just went ahead and pulled up the S&P because I feel like it's a as of the live show that we're in now, it's a pretty big move counter to what we've been seeing the rest of the week. And
Yep.
I almost feel bad wanting to talk about what happened in the week because this one move in the last 45 minutes basically made it all up. I guess your take is, will it stay? Because it looks like
Yes.
we're right back at these all-time highs.
You totally just took my point. In fact, I'm watching it. I'm watching this bar. In fact, let's go ahead and while we're at it, let's drill down to a smaller bar. This is going to be a 15-minute bar. In fact, let's just go down to a minute bar, shall we? And let's take a look. So here's, there was some excitement. 10 o'clock came around, and within the speech, they heard that one sentence, and it's been going up. But we here at Trading Trainer, I talk about being an end of day trader. And when you're an end of day trader, you look for end of day signals. And then if you get an end of day signal, you look to trade the next day. And a lot of times, what we do the next day is based on some follow through rules that you could either have somebody who has even very little or no idea what the market is about follow your instructions so that you don't actually have to be in front of the computer. Or nowadays, a lot of people just program their automatic traders. And one of the rules that we put in for follow through is don't trade until the afternoon session. And a lot of my traders actually don't trade until the last hour of the session, which is called professional hour, because in the morning, especially in the first hour of trading, we call amateur hour. Then there's the rest of the morning session, and then there's the afternoon session, and then that last hour of trading is called professional hour, where, the big money market movers come in and rebalance their portfolios ahead of the next trading day. And so we don't trade until the afternoon session, if not waiting until professional hour. Look, we had that big jump out. That was a lot of hype. The morning was a lot of excitement. But you'll notice it's this kind of parabolic move where already it's starting to flatten out. And I wouldn't be surprised if we start pulling back and during professional hour see some profit taking on this 1 day gain. You know, it's rhetoric. It's another news headline, and as we've seen, the news headlines have about a 24 to 48-hour life, and then things go back to normal.
Yeah, my only counter to that would be what I heard all week, where everyone's like, "We're waiting for the speech. We're waiting for the speech." Like, because there really wasn't anything else this week to maybe gauge. I guess we had some Walmart or earnings
Yep.
yesterday, and that can kind of gauge the consumer. Did anything else stick out for you as we make new highs today?
Well, so I almost feel like, again, today is a news headline, but I think that what we saw during the week was actually more of, the actual reality of what's going on. That, Walmart reported, they did as well as they could, but, they didn't please investors by any means with what they reported. And a lot of the retail and a lot of services are losing the wind in their sails. We saw a huge sector rotation in the beginning of the week. What that means is that market movers took money out of those biggest companies that have been driving the market, right? When we look at the S&P 100, it's always going leaps and bounds ahead of the S&P 400, which is mid caps, and the S&P 600 and Russell 2000, which are small caps. Those like 10 stocks, especially in the AI world, everything from Meta, Microsoft, Google, Nvidia, right? Those stocks, Amazon on the e-commerce retail side, incorporating a lot more. Amazon is a lot more than just selling books like they were 25 years ago. So all of these have been carrying the market. In the beginning of this week, we saw a lot of money come out of those, right? And if you think about it, those are such mega caps, not even just large caps, but mega caps, that when you take that much money out of them and then say, where else can I put them? Even if you take a little of that money and put it into each sector, those are such small caps compared to that mega cap that we saw huge pops. I mean, I was looking at companies like in the solar, which, solar is going to lose their big incentive here in the United States come December 31st. So you would think solar would get a drop, but First Solar and Enphase were like shooting up by leaps and bounds just because they're defensive plays compared to kind of the AI move. So in the beginning of the week, Monday and Tuesday, we saw sector rotation. Wednesday and Thursday, we actually saw some risk off, meaning people were taking their money out of the market, out of all areas of the market, and putting it into bonds. And then this morning, well, we saw this spike. We see the equities going up, although I'm already seeing the equities kind of topping out and starting to pull back. And we saw bonds kind of shrink. So money went right back into the market after Jerome Powell made his speech, but I'm not sure how long that news headline is going to last. We'll see.
Yeah, and heading into Friday always makes things interesting because it seems as if Friday sessions have been, hit or miss. Hitting today, uh,
I like to watch from a technical perspective, Sip. I mean, we can delve into the whole, week of movements and pull up my rainbow, but I'm watching this. This is right here, this little bar here from yesterday, which was right here, to today. This is what we call the live tail. So this bar is moving up and down, and we call it a tail because it kind of wags up and down like a doggy's tail. And it's right now back above the pink. The question is will it stay above the pink or will it wag lower? That's what I'm interested in seeing specifically before the end of day today is where is this light blue line going to be at the end of the day? When it's above the pink, it forms a green arrow. Is that green arrow going to live through the end of the day? If we wind up closing below the pink, that green arrow will disappear. So I'm going to be at least checking in at the end of the day to see if we still have a green arrow, if this light blue line is still above the pink or not.
Yeah, and then it's like, okay, so we got a hint of a potential confirmation of the interest rate cut. What's next week? But I want to bring it back to the small caps. In theory, we talked about the deviation of the large caps that making up the large indexes, and so that money into the smaller names, that's probably good for in the long term, right?
Yeah, always having a balanced market and not just having a few mega caps driving the whole market. You know, spreading the wealth. It's always better to spread the wealth than have it concentrated. So having that sector rotation wasn't actually a bad thing. And the amount of money that actually was coming out of those, top 10 stocks wasn't significant to ruin their big piece. But, there's such big companies that even taking a small chunk and redistributing it somewhere else made huge impacts on those small caps. But then, like I said, by yesterday and the day before, this past Wednesday and yesterday, Thursday, man, we were seeing, just a lot of just money coming out of the equities market and going into the more secure bond market. Although today that's been reversed in just a few minutes. We'll see what happens. We'll see what happens by the end of the day. I'm wondering if already by the afternoon session, if things will start to go back to risk off. That's my insights.
And then I was going to bring us back to your VIX trade because even if the market in general is hitting new highs and it seems as if things are on the positive. This is one of those tools where you're always kind of getting yourself like an insurance contract in case something happens in the alternative. Because does the VIX shoot up faster than it shoots down? I guess I'm looking at it down
Always
12% today, which is a pretty big move to the downside.
Which is unusual, right? Usually we call it the bear climbing up the stairs, right? The bear trepidatiously climbs up the stairs. And then I'm sorry, I got that wrong. The bull is what trepidatiously climbs up the stairs. In other words, the bull climbs up the stairs slowly. It's the bear that jumps out the window. The VIX is opposite of that, right? The VIX is a measure of fear that when it goes up and confidence or security when it goes down. And usually, again, confidence and security are slow movers and fear is a fast mover. So what's happening today is completely opposite of everything, which is why I feel like it's fleeting, right? I feel like, there's so much fear of missing out and there's so much excitement. And I listened to myself to the speech and I feel like a lot of folks who here's what I'm going to break it down to. I feel like a lot of the folks that are driving this market uptrend are the folks that are in the market because they are seeing all-time highs. They've possibly never been in the market before, but they just don't want to miss out on supposedly all this goodness. And so they're getting in, but sadly, I think they're getting in at highs, right? They're getting in instead of buying low and selling high, they're buying into the highs. And I think you gotta um I think you've got to be a little bit careful when you let those people move the markets. And I really, especially, I talked to two market movers. Market movers are like hedge fund, pension fund, mutual fund. I talked to a pension fund manager this week, and I talked to a hedge fund manager this week, and I feel like they're watching, all this money come into the market out of fear, and they're just waiting for any sort of moment to take those profits and, drop the market. And, we were talking about the Fed president and their speech that happened this morning. And again, these conversations were a couple days ago, but they're basically letting all these excited little folks with their savings coming into the market move the market up, and it poises it so that the market movers can then take those profits. These little guys who are pushing into the market, getting excited about whatever little tidbit they can grasp onto, they push the market higher. And the pension fund and the hedge fund traders are like, great, you've just ballooned my portfolio further. But as soon as they see any hints from, their in-depth analysts that it's going to be done, they'll take their profits and kind of basically do what markets do, transition the money from those people who got in when the markets were high, transition that money into their own coffers.
Real quick on the VIX. So,
Yep.
with that arrow down, you don't want to play that. You want to kind of wait for it to settle in a little bit and maybe look back to, for a pop to the upside just because of
I'm
your
in.
yeah.
So here's what happened on Tuesday, and I understand that this everybody was waiting for this Fed speech, but again, I'm a realist, and I'm looking at the actual bones. And don't get me wrong, I got in here as well, right? This was the end of day signal, and then this was the actual follow through day. We had an end of day signal Tuesday evening, and the follow through day was yesterday. So I'm in on my VIX hedging trade. My VIX hedging trade, if it doesn't go my way, it winds up breaking even. So there's nothing wrong with a trade that breaks even. But the good news is if the trade, if people come back on Monday and they've already digested what Jerome Powell said, but then they start looking at the bones of the market again, the VIX is going to go back up. And so as that fear starts to come in, as they start to see, Walmart's not doing well, Chipotle's not doing well, McDonald's is actually not doing as well as they wanted to be. If they start looking again at, this is the environment we're in, who cares what just one news headline says, then the VIX is going to go up and my hedging trade's going to be just fine. So whether I break even or the VIX hedging trade, I almost don't want the VIX hedging trade to work, because what that means is that the rest of the market is going into the pot. So, but I placed my trade yesterday on the VIX just like I did 2 days after I got my signal the last time, and the trade broke even. And if this trade breaks even, great. It means that the market's continuing on its kind of inflated rally. But I'm prepared, Sip. I'm prepared.
Yeah, and I would imagine some of your other positions are looking really good if there were any of those, premiums to the upside, or even just, the long-term portfolio looking good on a day basis. And that's kind of the beauty of the risk reward is you get a little bit more reward in other areas. You take a little you take a little risk in other in the VIX, and that's the tools that at our disposal. So yeah, we're making good time here today. Do you want to run through your little pullback here real quick? Because
I
I
sure
mean,
do.
look at that. It barely even went into the magenta.
Yeah, but it did go into the magenta. The previous times, it never made it, right? If I go back looking at some of these other ones, you'll see it comes short. Each time it's come short. So look at this time. It never even made it close. And then the two subsequent times, it made it. And then here we are again. You can see my fast MACD is ignoring today's move. Let me take a look at that dog's tail one more time. I got to pull it back up. Here comes the 3 and 5, which is that dog's tail that I'm looking at. So the dog's tail is still present, but look, we're pulling back. I have a feeling, Sip, and again, you'll have to check me when the market closes today, at 4 o'clock Eastern time, 1 o'clock Pacific time. But I have a feeling we're going to see ourselves way off of today's highs, which were just a few minutes ago. And I wouldn't be surprised if that dog's tail goes below that magenta line and we lose this green arrow. What happened is we got a top reversal. You can see this confirmation here on Tuesday. We got this confirmation that a top was found. And so all of the moves up in this current trend have been ideal. They've every time a move up falls into the green zone, it's ideal. It's the pullbacks that have given me a little bit of agitation in my stomach, right? They haven't been pulling back enough, which again is it brings back so many memories of the dot-com boom, so many memories of the charge up ahead of the 2008 financial crisis. I am happy that this current move went down to the pink. I'm just surprised about today's move on just that little sentence out of the Fed president's mouth. That's why I think it's fleeting. And I wouldn't be surprised if that arrow goes away and we don't go lower into the red. I know I say that every time, but it's just that this uptrend is so reminiscent of things that have happened in the past where, everybody said it was good until it wasn't.
Yeah, and I listened to some of the speech too, and I'm also surprised because it wasn't like he blatantly said
No,
we're
absolutely
going.
not.
And then later on, he kept referencing inflation. I'm like, oh well, he said inflation like 7 times versus, the alternative. So what are they thinking now?
So yesterday, this number was down at 75%, and now it's back up at 90%. This is the investors' sentiment on what's going to happen in September with rates, right? So this is the current rate. Yesterday, this was at 25%, and this was at 75%. So you can see that right now, this jumped up 15 points, which it rarely does this close. September 17th is literally like 3 weeks away. So, people think that there's going to be a rate cut. Yesterday, they were questioning whether there was going to be a rate cut. And in October, look, if we take a look at these numbers down here about what it was yesterday, this has jumped 10 points. It was 35% yesterday. That means another rate cut in October. This means that they hold rates. So expecting a rate cut in September, almost given. And that's what we said last week. But yesterday, that was under suspicion. In October, 50-50. Yesterday, it was closer to no, we're not going to get another rate hike. Today, it looks like 50-50, maybe 45-50, that the Fed's going to go ahead and keep it here. And then let's see. This is December. So December, where are they going? They're talking more about having another rate cut in December. So we're still back where we were a week ago. Where it was really interesting was yesterday, right? Yesterday, they were like, oh, a third rate cut this year is off the table. We're only going to get 2. It's probably going to happen maybe September, probably October, but then another one in December, and that's it. Now we're back to it could be 3, 1 each quarter. I don't think we're going to get anything like a half-point rate hike. And again, based on what the Fed said, and the Fed basically saying, hey, we're worried about stagflation, I could actually see the Fed, doing nothing unless, of course, our president continues to pack the Fed, which it looks like he's doing. He's been replacing Fed president with loyalists. But, and we heard about and we saw in the meeting minutes this past week, the meeting minutes were released on Wednesday of the last meeting, that there was that dissent between the Fed open market committee presidents that are on the voting committee this year. Still, anything can happen. I think that we're going to be playing this day by day. And, I'm not sure investors like that, but investors are in the game.
Yeah, I feel like the employment numbers and situation data is going to be very important
Absolutely.
leading up to this, just because it was pretty bad last time, and I don't think everyone took it as serious as maybe they should. Just because it is. I feel like it's a double-edged sword with employment, not just the economy, but now we have these evolutions of technology, like basically replacing everybody, and it's like, oh well, that could be a different kind of problem. Anyways, we're here to take advantage of opportunities like that. Um, Using the wonderful world and tools of options. So if you're interested in learning a little bit more about what AJ is doing, what the team at Trading Trainer is doing, we've got a quick links page. I've gone ahead and thrown that into the chat. You've got all the social goodies. You've got the free indicator, as you see AJ referencing. Those arrows on the screen, you can get access to that. We've got the options lookup tool 1.0 that's in there, that's still accessible to everybody. 2.0, 3.0 on the roadmap. So get in on that early so you can kind of see the evolution of that. And then, we've got, joining the program, coaching, and then more about just Trading Trainer in general. So if you're interested in following along, learning more, the links are there. We're going to get to AJ's pick of the week. We've got some speed rounds. The market is up, but whether the market's up, down, sideways, AJ and the team are always looking at different ways to take advantage of it. So we are streaming live as well. So if you got any questions, feel free to throw them in the chat. Otherwise, we're going to take a break and be back in a jiffy to go in some, individual names. Sit tight, folks.
I get it. You're afraid of trading in the markets. Guess what? I've got your answer. I've got 4 strategies I'm going to give you along with the tools to make it super easy. I'm going right home, giving you the webinar. I need you to sign up below and meet me in a few minutes.
It's funny, AJ, when I watch that commercial and you're driving around in the Tesla, I'm like, man, Tesla's really come a long way since that, first Y model. All right, let's see. Your pick of the week for this week is, let's see. Or do you want to revisit anything from last week? Do you have anything on the BBWI trade I have here on my
Sure.
list? And then I guess Key, although Key was just an in and out for us, so I don't think you're in that.
No, Key was a earnings play. Bath and Body Works. Oh, this trade is just doing super fantastic for us. So, I think I'm gonna type up and create a couple of slides in a deck or something that show how well this trade's been working for us. So, when we first featured Bath and Body Works, it was about 2 months ago. And, about 6 shows ago, 7 shows ago, we said, let's go ahead and stock up either on Bath and Body Works stock or on a substitute option. So when we do a substitute option for these types of trades, we go way far out in time and we go deep in the money. And that creates kind of a option that is leveraged. It's acting like the stock. So when the stock goes up $1, so does the option, but it's at a cheaper price. So we were saying stock up on that, start acquiring that. And then about a month ago, we said, okay, now's the time for us to sell premium against that initial covering position and put on a protective option. And a lot of folks sold the premium that was expiring within a week. So they made that quick paycheck in 5 days. And then they got a signal to sell more premium. That's what I did. And then we kept our protective option in place. We got a signal to get rid of the protective option, but didn't get any of that follow through. And that's kind of what differentiates a lot of my traders from other traders. We're end of day traders, meaning we don't sit there in front of the computer all day. We've got better things to do. What we do is we come in the evening after the market is closed. We examine where we have signals. And if we get a signal, then we look for follow through the next day. And that follow through is usually evaluated by either, somebody who you assign. I used to first, I would use like family members. And then at, around 2008, I hired a whole bunch of folks in the Philippines, simply because, they're very good college educated workers, but they were, much that they don't cost much per hour. So I would have them watch the markets during the day and make the trades in my portfolio based on my simple instruction set, right? And so, whether you have somebody that you assign or you're doing what I've been doing for about the last 8 years, which is using these automatic trading platforms to program in, looking for intraday follow through. So, what I'm saying here is when we got our end of day signal on August 7th, we looked for trading on August 8th and we didn't get the follow through. Our automatic traders kept looking throughout the last half of the day, the afternoon session, professional hour, looking for those follow through signals. They didn't come. So at the end of the day, there was no trade made. And then at the end of the day, we got this opposite signal. And so we stopped our automatic traders. And, you could basically keep looking for follow through until you either get the trade filled or your signal gets canceled out. Well, we did not get our trade filled and the signal got canceled out. But then you can see here we got another end of day signal on August 13th. And here's a perfect example. August 14th, the automatic trader said, no way. I reset it because there was no cancel out signal at the end of day. So on August 15th, again, I came back at the end of the day and the automatic trader said, hey, there was no follow through, no trade. On August 18th, Monday, right? This past Monday, the trade was there. So this trade was, hey, get rid of your insurance policy. And so I did. I went ahead and liquidated the insurance trade that we do. It's a 3 to 6 month out of the money trade, and I actually was able to liquidate it for about the same price that I paid for it. So I kept it all this time, over a month and a half, and when I sold it for a few pennies more. It paid for all the commissions. At the same time, I was able to capitalize on 2 premium trades, which actually, basically paid me close to 20% total. And now I'm off waiting for the next opportunity to sell premium. My break even price of my initial position, because I sold those 2 premium trades, is so much lower now. And as the stock moves up, I mean, I'm now just supercharging my gains. And again, if we come up to around $33, $34 and it peters out like it did the 2 times before, I'll sell premium again. And that's what we do. We just make, hopefully double digit returns every time we sell premium and buy the protection and roll it out.
Yeah, this has been one of the best setups we've shown, even just
Textbook.
on
I think total SIP, we're already up about 30%, 35%. And we haven't done anything. We've done about 3 trades altogether over a 2-month period, adjustment trades on this. And otherwise, we're just sitting there letting time work in our benefit. And that's the beautiful part of this option trading strategy. Is it literally is, you put your money in, you look at a couple of stocks at the end of the evening after the market's closed, and it just makes basically double-digit returns every month.
Is that earnings approaching? Is that something you would keep in mind or disregard?
This particular stock seems to blow off earnings. Now, I'll be looking at the headlines over the weekend to see if I should pay attention to that. Worst thing comes to worst, I'm in a stock position. I could absolutely, the day before this earnings is coming in, before the market opens on August 28th. So on August 27th, I could totally liquidate this into cash just very quickly, like at the end of the day. And then depending on what earnings does, I could pick the trade back up the next day just to make sure I'm not in there in a volatile event. Or I could let it ride and I can collar it. If I collar, there's a way to protect your premium trades when something unexpected is on the schedule. You can either turn into all cash or you could just collar it right then and there. And once you've collared a position, it's hands off, it self adjusts. So I'll make that decision on August 27th.
Awesome, for sure. We'll keep an eye on that, maybe bring it up in the future. BBWI is a name we've been looking at for quite some time. Another name that you're looking at this week that you're seeing a potential setup in is PG&E Pacific. Whoops.
It's your electric company there in California.
Yeah, PG&E, ticker symbol PCG. What do you like in the setup here?
I think it's time. So I got a signal. You can see here, I got a signal on August 14th. That was, again, end of day signal. I'm an end of day trader. So then I was looking for follow through, and I actually got that follow through on August 15th. And then it popped up against me. Now these are the moments where you got to trust your trade plan. I got into this on August 15th, and then it popped up a couple days. And that gives you a little bit of, did I do the right thing? But again, stick to your trade plan. We plan our trade and then we trade our plan. What I want to do here is I actually want to short PG&E. And I could short it in two different ways. I could short it in the actual sense, which is to short the stock. And if you do that, you're going to need a margin account, and you got to make sure you're aware of the fees that are come along with shorting a stock. But the other way to do it, now that we're option traders, right, is to find a substitute put option, right? Put options, you can go deep in the money, far out in time with a put option, and it'll act just like the stock, only opposite. So if the stock goes down $1, the put option goes up $1. And so we're going to create that inverse relationship. It's still dollar for dollar. It's just the opposite. So that can be a way to short the stock as well, by buying that deep in the money, far out in time. I'm talking about not expiring until March or even June of next year, and going so deep in the money that the amount of intrinsic value is 95% of the price of the option. So we're talking about something that's truly trading at parity. I would buy that put option, and that's really nice because you could do that with a cash account. You don't need all this special margin account and worry about fees. You're basically just buying a put option and making money as the stock goes down. In other words, I think PG&E has topped out here. And I went ahead and did this trade, like I said, on August 15th, last Friday. And we're seeing what happens now, but we've already seen some of this pullback. I'm expecting PG&E to drop about $2. If it drops more, great. My put option will continue to appreciate. But even if it stops at, $13.50, even as low as $13, when I get that signal, and in my case, using my indicators, it'll be one of these light blue arrows. That's when, instead of selling call premium SIP, I'm going to sell put premium and buy myself a protective call. My protective call will be 3 to 6 months out. So I'm thinking maybe the January leap, and probably the $15 or $16 strike price. So that'll be my protective option. And my premium, of course, is always going to be selling a near term at the money option. So that's how I set my collar. And it's going to wind up to be a great trade. So I'm looking right now for those folks that haven't been able to get caught on board. I still think there's an opportunity to short some PG&E, and again, either short the stock, the literal sense, or buy yourself a deep in the money, far out in time put option. Maybe the March $20 put looked like a good one. in my analysis to use as a substitute.
Yeah, two pros that we usually like here. One, a pretty boring company with electric, and then two, really nice price point. Sitting there at 15. So a lot of opportunities to find something that works for you there. So that's AJ's pick of the week, PG&E, ticker symbol PCG. We've got three other names to run through in our speed round. Why does it keep doing that? All right, starting off with Kim out in Breckenridge, Colorado. Another more boring name, Union Pacific Rail. Is it rail? Ticker symbol UNP.
Yeah.
I think this might be in your wheelhouse, AJ.
Yeah, it's boring, but maybe it's going to not be as boring. So the railroads, you got to remember in the United States, different than in other countries, the railroads are freight, right? Amtrak actually rents railroads to send passengers, but Amtrak is kind of an afterthought. Having people ride on the rails. I mean, the United States is big enough that people are always thinking about airplanes, right? So when you think about Union Pacific, you think about CSX, you think about those companies, you're thinking freight. And you want to pay attention for these companies. I think there's some potential consolidation, meaning mergers and acquisitions coming up. So you'll want to pay attention to those news headlines. But in the meantime, um, again, this coming back to the macro news, tariffs may slow down goods and the buying and selling of goods, especially in this holiday season coming up. The president already said that kids don't need as many toys as they usually do. So, we've already seen a downtick in the amount of freight getting moved in the last 3 months. They've all been reporting that at their earnings, so keep that in mind. With that said, here's what I think, Kim from Breckenridge, Colorado. I think that we got a signal for a bottom being found. That was on August 13th. We didn't really get follow through until either August 19th or 20th of this week. I'd be a little bit careful. If you got into that stock, great. And again, you can either get into the stock by actually buying the stock, or I'm sure that there's a nice substitute option for that. Or since it's so gosh darn expensive, usually when we're doing our strategies, we look for lower price stocks. You could actually use a vertical spread, which lowers the cost basis. Just remember, there's a heck ton of risk that most people don't account for in vertical spreads. When I tell people about vertical spreads, I always say only do the vertical spread based on how much of your portfolio you're willing to lose. So that's how you size your position. Most people are only willing to lose at the most 4% of their portfolio in a losing trade. So that means your vertical spread should not be more than 4% of your portfolio. I've seen people go out and go crazy because it's so inexpensive. I've seen people invest 20, 25% of their portfolio into a single vertical spread trade and then have 20 to 25% of their portfolio evaporate in an instant. So make sure when you're sizing vertical spread trades, you only size it for how much you expect to lose. It's going to be a small position, but that's really all you want to think about. Anyway, if you got into one of those positions that I just mentioned, great. We'll look for an opportunity to either get out of those positions or to sell premium against those positions when we top out. And hopefully that happens above $230, because then, we'd be able to leg and make that position work for us. And this doji bar that's forming today is already scaring me a little bit. The other thing that I almost recommend you look for is you let it get up as high as it's going to get. And then I would actually play against this. I would think about shorting this in the long term. So, in other words, again, either literally shorting the stock or doing a bear vertical spread or buying one of those deep in the money, far out in time put options. I'd rather play against this right now than for it. So if you're already in it, then let's see if we can make something out of it by selling premium or getting out at the right time. But if you haven't gotten into it, let's let it go as high as it's going to do. And then let's actually get our initial position playing against Union Pacific.
Yeah, definitely got to get creative. I mean, it's like
Options let you do that, man.
20 times more expensive than the example we just went over. So definitely a full spectrum of names out here. So thank you for that, Kim. Moving on to our second name, a name that we cover fairly frequently. David out of Houston, Texas, wants to know about Halliburton, ticker symbol HAL.
All right. Well, look at Halliburton popping today. Oil, the oil's been coming up very slowly. A little bit higher than it has been. It actually took a little bit for the beginning of the summer. It came down a little bit. I think it's hovering now around $63, $64 a barrel. There's a little bit of a push, at least in rhetoric, to start the process of finding more oil, or not finding it, but actually taking advantage of it. Whether that plays out economically or not, I'm not sure. Okay. We got a signal on August 14th. I don't think we got follow through on August 18th. Probably getting some follow through today, but we're already pretty much across from our channel. Let me just draw. I'm going to use a tool here called the linear regression line. That's a statistical term that basically, let's go from right here. It means best fit trend line, and it mathematically draws it. You see there's a little bit of an uptrend on Halliburton, but actually not anything to get excited about. We look over here, and the beginning of our linear regression line was roughly $20.50. 5 months later, it's $21.50. That, to me, is a sideways stock. I could play for it or against it. I don't have a bias on this, but I think if you haven't gotten in down here, and I'm not sure where you're coming from on this, but if you haven't gotten down here, David, I could see potentially letting this go as high as it's going to go, and then playing against Halliburton. I wouldn't worry about this slight uptrend. I could see shorting Halliburton or buying some deep in the money far on time put options. We call those option substitutes. Once it tops out, and then letting it fall. And once it falls and hits a bottom, that's when you collar the trade and start making some income off of it. Sip's right. We feature this one a lot because this one is a great income generator. But I think, again, if you haven't set up your initial covering position, let it top out. Just like I said to Kim for Union Pacific, let Halliburton top out, and then let's play against Halliburton. That's what I would do.
Yeah, it looks like we're kind of mid-move, trying to figure out what the next play is going to be. And some setups are a little bit cleaner than others. This one, we're going to kind of be a wait and see. All right, there you go, David. Moving on to our third and final name in the speed round. This is Carol out of Whistler, British Columbia, Canada, interested in JD.com, another name that we do cover on the show fairly often.
Well, it was my pick of the week last week. So I guess you're wondering, I actually was saying, let's go against JD.com. So I got a signal. I wanted JD.com. As of last week, I wanted JD.com to go higher. I wanted to get it up to $34 before going against it. It didn't. It gave me a signal that it was done. It was done topping out. And this actually, again, brings up that topic of me being an end of day trader. So look, I got this signal that we had found a top right here on August 19th. That means August 20th, I was looking for follow through. So let me give you some insight on what I look for in follow through. Let me go ahead and I'm going to just bring up an intraday chart because, again, the follow through is something that's really easy to evaluate, meaning you could offload it to somebody else or you can program it with really simple automatic trading tools. So you really don't need any of these end of day indicators that we look at. You're just going to look at price. Basically, you could throw in, I teach during my program, I throw in a couple of additional things that people can use in their automatic trading, but for the most part it's price. So again, let me just verify, August 20th, after the market closed, August 19th I should say, we got our signal. So let's see if there was follow through. So on August 20th, that's right here. So let me zoom in even further so you can really see what I'm doing. August 19th, we came at the end of the day. The market had closed. My toddler was asleep, and I'm looking at the market. I said, oh, I got a signal. I should see if there's trading tomorrow. So what I look for is I say, okay, I want to be trading. If I really did find a top, like my end of day signal says, tomorrow I want to be trading below the previous day close. And I also want to be trading below the confirming day close. In this case, those are the same. And I also want to be trading on the day of below the open range. The open range is a day trader's trick that you look at the first half hour of trading, and that first half hour of trading between here and here, between the high and the low, the day traders pay attention to whether or not you're trading below this range or above this range. And in our case, because we are looking for a top to be found, we're curious about trading below that range. And yeah, the scoop is we don't come in until either the afternoon, which is roughly from here on, or even the last hour of trading, which is here on. So we don't evaluate whether or not we want to do any trades until the afternoon session or until professional hour. Some people wait all the way until professional hour before they start placing their trades. And that's just so you make sure that the signal that you got the previous evening is actually going to amount to anything. And in all reality, yeah, there was a little bit of movement just during the day right below there. But in reality, my automatic trader came back and said, no go. That is not a real signal. So we tried again the next day. So the next day, I didn't get any sort of, canceling signals. So here is our confirming day close. Here is our previous day close. And here is previous day close. There it is. And here is our open range. So again, in the afternoon session, you can see that my automatic trader, when I came back at the end of the day, basically said to me, hey, dude, no more follow through on this day either. And then if we come back to our regular chart, our daily chart, what you see is we're getting this signal that says, okay, stop looking for follow through. That signal, I'm canceling out that signal. We have a chance to go higher. So all to say, Carol, I bet when you got my suggestion last week of trying to short this, you're like, well, did it do what you wanted it to do? No, it hasn't done what I wanted it to do, but I also haven't gotten good signals yet. The signals, I kept trying to trade them and they never did amount to anything. They've since then been canceled, and I'm sticking by what I said last week. I'm now looking for this again to go back up to $34. Give me a solid signal like it did on July 25th with follow through on July 29th. I mean, that was a great trade. If you got in and shorted on July 29th and sold premium, you'd be, happy as a pig in poo right now. We're going to do the same thing. We're going to wait for the good signal. We're going to wait for price action. Just like I said last week, this is just an exercise in patience.
Yeah, 2 in a row. Some of the setups are a little bit better than others, and looking for that follow through. So thank you for that, Carol. That concludes our speed round. AJ, markets are still up 1.5. VIX down 12%. Heading into next week, what are you looking for? What advice would you give? Are we still in this summer doldrums, at least for the next 2 weeks? Is today going to be one of those essential or events or whatever what's the word,
Existential.
existential events? And
I'm
then
waiting for Wayne. Wayne already said, "Hey man, I got to go look up the word trepidatious in the dictionary." And trepidatious, of course, means cautiously adding your money. So, just to address that really quickly, when I talk about the bull climbing up the stairs, when you think about people putting money into stocks, you think about them being really cautious about it because stocks are perceived as quite risky. So they cautiously or trepidatiously put money, and you expect the bull to climb the stairs slowly. And then when something scary happens in the stock market, people are like, ah, and instead of taking their money out as slowly as they put it in, they tend to take it all out at once, causing the bear to jump out the window. But what we're seeing today is exactly the opposite. What we're seeing today is money is going into the markets quite quickly. Of course, again, I argue that it's probably just in this morning session that that's happening, and we might already be seeing some profit taking for the rest of the day. And I bet after we kind of sleep on it for the next 2 days over the weekend, we'll see what investors think on Monday. And so that's where I am. Number one, I want to see what happens by the end of today. Is it really going to be at today's highs, or are we going to wind up kind of moderating and pulling back after kind of really delving into what Jerome Powell said and realizing that maybe we assigned too much meaning to that? Again, it doesn't matter what investors do because as option traders, we can capitalize on whatever it is, but we need to pay attention to that. And we also need to pay attention to what happens over the weekend and especially on Monday. I do think that we need to pay attention as to like next week. Let's take a look very quickly at what's coming up on the economic calendar for next week. So when we come back in, new home sales, durable goods orders, consumer confidence. I like to pay attention to consumer confidence. That's being released on Tuesday. And we've got on Friday, we've got another variation of GDP. But on Friday, we get our all important personal income and outlays. So that's going to be significant because I think that consumer confidence, personal income and outlays, these are things that the Fed actually takes ahead of and of course, then the following week, we're going to get the employment numbers and then the Fed. So I think people are going to be trying to pay attention to what monetary policy does, plus paying attention to whatever headlines are on Truth Social, especially when it comes to, tariffs, trade, economic policy, anything that could affect the markets. But I'm curious. I'm paying close attention to what the market does when there are no headlines like all this week. And I agree with you, Sip. I think that September is going to be when folks start piling in back after Labor Day. I think we're going to start seeing things ramp up. I think that this holiday season, they call it Black Friday because traditionally stores run in the red all through the year, and then it's the holiday season that puts them in the black for the year. I'm wondering again, based on this rejiggering of our economy to being more of a tariff-based economy, whether or not that's going to affect retail stores. This is going to be a very interesting third and fourth quarter. I think that's what we're going to look on in the long term.
Yeah, well, we're definitely going to see how today pans out over the weekend because the bull shot up the stairs today. We'll see if he can
Which doesn't make sense.
stay up there. As always, we invite you to follow along all of our socials. The link to AJ's Quick Links is in the chat. Get access to the free indicator suite, learn about the trading training program, learn about some coaching. And if you want to learn about some of these, introductory, more basic premium trading strategies, there is a free workshop in there that'll get you started. That's pretty much going to do it for us today. It's still summer. We'll see how the day pans out. Hopefully everyone can get outside, enjoy some of this weather. Back to school, back to the groove, back to everyday schedules and life is right around the corner. So we'll, hopefully continue to take advantage with our wonderful repertoire of option trading tools and the trading trainer community. AJ, thank you for your time today. Thank you to all the lovely folks out there that have tuned in. We do truly appreciate it. Feel free to hit that like, hit that subscribe, hit that share button, and we'll catch you guys next week.
Take care, everyone.
Thank you for tuning into the AJ Brown Show. If you're interested in learning more about AJ and his investing techniques, head on over to tradingtrainer.com and create your free account today. And if you're not already a subscriber to the show, hit that subscribe button and we'll